We are excited because today we're gonna be talking about making money during these inflationary times in commercial real estate, right? And you can take what we're talking about today in CRE, commercial real estate, and apply that to residential homes, 2 to 4 unit properties, really business in general. So we're just gonna be talking about some ideas of how do you make money, all right? Very, very important because they're saying inflation is at 8.4%, whatever it is. It feels like it's 25.3%, right? When you go into the grocery store the other day, my wife came home from Safeway and she got I spent $200 some. I don't understand. I only got 3 bags of food. What happened, right? And you know, I was on the grill the other day, bought some chicken. I looked at the pallet of chicken wings. It said $27. I'm just buying stuff, right? And when I got home is when I looked at the numbers. I was like, yo, that's kind of outrageous right now. I could have went to Wingstop right here and got me a 20-piece for less than this chicken that I have to then grill and put on. Because it's insane. So therefore, what are we going to do? What are we going to do? And the thing about it is, in every period of time, whether it's inflation, deflation, up market, down market, sideways market, somebody's making money. All right, somebody making money, a show, and more be it, somebody's being profitable. There's one thing to make money, but being profitable is what we're talking about, right? The income is more than expense, right? Because the biggest thing about inflation is that the expenses get out of the roof, and a lot of times does not keep pace with whatever the income is of the business, of the job, of the property, whatever it is. So that's what we're going to dial into today. All right. Now, my name is Steve Peterson of Infinity Investments. I started the company in November 2009. That's significant because that was in the really kind of the beginning of the Great Recession, right? At that time, people didn't know, where the bottom was, right? We didn't know how long we were going to be in that down market. They called it toxic assets, right? All these toxic assets around, banks going out of business, the whole country, the financial system seemingly got bailed out, all of these things, right? But I got going in that time because I seen some opportunities as an agent and as an investor at the time working. I was looking at the prices of property. I'm in Oakland, California. And I looked at the prices where they were in 07 and then where they was in 09. And I was doing mathematics because the price of property, commercial investment, also residential properties had dropped 60, 70, 80% in some cases where I'm at. Rents dropped maybe 5%. And the rents that dropped 5% was that period of time of a rent drop was maybe 6 months, maybe a year, right? From like 08, like the fall of 08 to like the summer of 09, because that was the shock and awe period. And then Obama got in there. That was when Obama first got into office, right? And it was a big change and a big shift going on. For me, I was excited because I was looking at where the prices were and I was seeing an opportunity. That's what I'm gonna bring that energy to y'all today to simply to say is that what we're experiencing now, inflation is the big news of the day. There's other challenges, right? Might bring the biggest opportunity of your life. Me starting my company, which is something I always wanted to do. I always want to be an entrepreneur. I always want to be a business owner. I always want to be a broker from the time I got into real estate. It was time, you know what I mean? It was time. And so I got in full head, feet, toes, all in 09. And I started my firm. All right. And since then, I had the honor and the pleasure to learn some things and develop myself. I was the president of the Associated Property Brokers, which is the Oakland chapter of NARAB, the National Association of Real Estate Brokers, which is the Black Brokerage Association. Also was the state chapter president of KRAB, which is the state board of NARAB. Right. I did that in 17 and 18. And 2018 was a busy year for your boy because I was also the president of NorCal CCIM. CCIM is a designation in commercial real estate, stands for Certified Commercial Investment Member. More than a designation, it's a network of the top people in commercial real estate. And so we have chapters across the country. I had the opportunity to be chapter president in 2018. The same year, I was chapter president of KRAP. So needless to say, here, but I learned a lot. I learned about a lot about leadership. I learned about a lot about people skills. Learned a lot about managing others, and from a standpoint of you're on a board, right, with other people. We're all volunteers in this. You can't dictate to your board like you could somebody who works for you. All right, so it's a little bit different. So you have to have some skills and finesse in order to push forward your agenda, because board members they're not on a salary working for you. They don't have to listen to you. You have some authority as the president. At the end of the day, you got to get the board on board with what your vision is. And so that really was great for me. And I met a lot of amazing people in the industry. And I would say to you, if you are looking to make money in these periods of time, is you want to expand yourself. You want to grow your skill set. You want to grow your people skills. You want to grow your network, right? The people who you are interacting with. Very, very important that you take this period of time to go out and do that, right? It's not the period of time to say, well, look, the market's going to be down. I might as well just, go to my job every day and just, hope that I stay employed and not be inspired by nothing. Now is the time that if you was ever thinking about taking a class, take a class. If you're ever thinking about doing a boot camp, do a boot camp. If you're ever thinking about joining some group, join a group. If you are ever thinking about volunteering in like a board or something, now is that time. Step your skills up, step your network up, and it will boost your business. If you're in business, it'll boost your portfolio if you're an investor. And if you're working for someone or you work for another, just in general, it's going to advance your career as it did mine. Right. And Infinity Investments is a brokerage company, commercial real estate brokerage. We focus in multifamily and small commercial real estate. We also do acquisitions and syndications. So that's enough about me and my background. Let's get up into it. All right. Now, we're talking about how to make money in inflation, right? So we need to understand this thing called market cycle, right? Every market has one. Every business has one. When the real estate market is good, now I started in 2003 as an agent and as an investor, right? I started my company in 2009. So I had 6 years in the game before I was an owner of the company, right? So what that also meant was before the market crashed, I saw the market run up, which was another unprecedented role in terms of growth, right? Of a cycle from 2003 to 2008, right? So I saw the cycles, but what I also realized is in a good market, there's this idea or this false belief that the real estate market only goes up. Or they don't make it no more land. You know what I mean? And real estate, I love real estate, by the way. It's just like anything else. It's cyclical. It goes through cycles. Everything goes through a cycle, man. That's just how business and markets roll. That's how it goes, right? And yes, there's a lot of outside influence to our markets from the Fed and from the government and all of this stuff. It's not pure free market capitalism, right? But there really is no more pure. Everything is manipulated to an extent. But market cycles are a part of business, right? Now, me being young in the game, I didn't know that for sure, but I felt it. I was like, when the prices, I remember I sold a house in 2005, my mom's house, my first listing that I sold, right? And I remember it was in Deep East Oakland. I sold it for like I think it was $345, whatever it was, 2-bedroom house, 700 square feet, turf, and bad roof, bad foundations, everything. The guy who bought it, they got a loan for more than they paid for the house, right? Get deals back in those days. Remember those kind of transactions. I remember at that time, this was like 805, scratching my head like, this is cool as a listed agent, but I was just looking at the whole transaction like, man, this don't seem to be sustainable, right? Now, and it wasn't, by the way, it was not sustainable. You know what I mean? And I didn't understand market cycles at that time like I do now, but I did understand the simple mathematics of things. And that didn't seem to make sense, right? And what does make sense is understanding the market cycles, right? And so there's 7 major trends impacting real estate cycles. Now, I didn't make this up. I'm going to reference a book that I really believe if you are serious about real estate investing, that you should buy. It's called Timing the Real Estate Market by author Craig Hall. And he's been investing in real estate since the early 60s till now. So and he keeps it real in that book. You know what I mean? Talks a lot of times people in their books talk about just the successes that they had and all the strategies. What he talks about in that book is some of the failures that he had and how those failures taught him how to navigate through the markets and how to understand market cycles. All right. So check out that book. It's on Amazon. Go and get it. But what he talks about in the book is that there's 7 major trends impacting the real estate side. Right? 7 major trends. The first 3 are, they kind of operate at the national level. And I would say actually the global level at this point, right? Because y'all know our economy is a global economy. Everyone is intertwined globally, right? As our economy slows down, so does everyone else, right? But these first 3 trends are national level, global level trends. They affect everyone. And that is inflation, we'll talk about today, interest rates, and the flow of funds in the real estate. That one gets overlooked a lot, right? The flow of funds into real estate, right? Because every time in the market, there's what's called a flavor of the month. It might be stocks, might be bonds, it might be real estate, cryptocurrency now, gold, silver, what's popular, right? And that's where money tends to chase the flavor of the month, right? And so when the flow of funds in the real estate is heavy, that's going to impact the cycle, right? That's why last year, 2021, was the record year in real estate. Because they made the Fed printed, I think the number was 43% of the US dollars of the history of the United States was printed in the last 2 years. They created all that money. And so a lot of that money flowed into real estate, commercial real estate for sure, but also residential real estate. Home became a lot more valuable, right? Because you couldn't go a lot of different places. So where you lay your head became a lot more valuable, right? It's always been valuable, but it did become more intrinsically valuable. And where people live changed. A lot of people moved out of big cities like San Francisco, New York, and went to other places that were less restrictive, right? And less, so many people on top of you, right? Where you can read a little bit and not have such an opposing. So that's the flow of funds in the real estate. That's why we had everybody in the game had a historic year in 2021 if you were halfway in the business, right? Flow of money was in real estate heavy. Last 4 trends, they operate primarily on a local level. So this is what's happening in your backyard. So is there job growth, in or out migration down the Bay Area? We've seen a lot of out migration last 2 years, especially the city of San Francisco, but even Oakland and other cities. Path of progress, right? In every city, there's going to be an area where the path of progress is going. The city has a plan of where they want to see development happening. I'm doing business in the city of Stockton. The downtown area is certainly in what's called the path of progress, right? You can see that the city's investing capital. They've got a plan for that area, right? The path of progress, right? And then new construction, right? Because new construction, especially big commercial projects, are going to show you where companies who have a lot of cash and they have whole research departments have said, hey, we're going to go and build over here. This area is hot. And they're not just doing that because they just picked up one morning and said, oh, we're going to go invest over here. No, they spend a lot of time and money on selecting what area they're going to invest in, right? And so those last 4 trends are on what's going on in your backyard, right? Knowing these 7 things will help you to be able to navigate, particularly now in these very inflated times. I talked about the Fed just printed, I believe the number is 43% of the US dollar. It could be 20%. It could have been 10% of the US dollar. That's going to have an effect, right? They made way more money, so the money in and of itself now becomes a little bit less valuable, and everything you buy requires more money, right? And that's why we're in this very, very inflated period of time, right? So you need to understand, though, okay, that is why these interest rates are the way they are. The Fed is now, just say, hey, look, we got to do whatever it takes to slow this inflation. I don't care if we go to, 7 or 8% interest, which still is low historically. Keep that in mind. Right now, I think residential home mortgages are mid to high 5s. Some people get 6s. Right now, I'm seeing interest rates on residential investment properties higher than commercial property loans. It's weird. I haven't seen that in my career until now, but that's what's happening, right? So we got to understand these things. Now, an interesting tip I wanted to share with you about the flow of funds in the real estate is what's weird is, yes, we have inflation. Yes, we have high interest rates. However, there is still money flowing into the real estate market. And I'm talking about from an investment standpoint, also for residential, talking pure investment. And a lot of investors will say, hey, look, we take some losses over the stock market. I need to go and put my money somewhere I can feel safe about it. And the general understanding in inflationary time, hey, the one thing about real estate is I can buy it with debt that stays fixed if I get a fixed rate. And I can have a property that is going to go up in value in general, right? So a lot of people are putting money is still flowing into real estate. There's a lot of capital out there looking for deals. In fact, there's more capital than there is deals. So that is a good thing. And I want to reiterate, I want to give you some positive, reinforcement right now. This money, now, the money might be expensive, relatively expensive to what we used to. Ask anybody who was doing deals in the 70s and the 80s about their interest rates. My grandma was telling me, we was talking about high interest rates on 4th of July. And she was like, man, I don't want to hear nothing about no high interest rates. I bought my home 18%. I think she bought it in the 70s. 18% on an FHA home owner occupied loan. It's probably like the cheapest rate you can get of anything at that time. 18%, right? Paid it off, it's all work. So she don't want to hear nothing about, you guys complaining about 5%, right? Keep that in mind as well. So there's still funds flowing into the real estate business. And real estate can be a really good hedge for inflation. However, inflation can be a double-edged sword. It is a double-edged sword. While it can drive our prices up, but one thing about it you got to understand is it will drive expenses up, right? So I'm going to talk about the cash flow model quickly, but if you have to make sure that you're just not buying properties just for the value growth, right? Because the interest rates are we may be stagnant on value growth, and we may even be down on value growth. If you're in a market where there's no rent control, you really benefit because the rents are going through the roof right now. It's up, I think, 20% year over year in my market. And that ain't gonna slow down no time. So that's the good news for the real estate investor, again, not good news for the consumer, but for the investor, that works. However, your water bill, your PG&E, gas and electric bill, your bill for everything that you are going to use to run your property is going to go up. All right, so that's what I mean when I'm saying inflation can be really good for us, but it is a double-edged sword that you need to be aware of. And you need to understand these 7 things. Spend time on this one. You need to understand this in order to navigate how we're going to make some money out of it, right? And you need to figure out where are you investing. And by the way, you don't have to just invest in your backyard. Like I'm in Oakland, a lot of people is just like, hey, I can't even evict somebody out of my building right now. I'm getting right. And to each his own, I can't argue with nobody like that. But I can see the trend, and I see a lot of my clients selling buildings and going elsewhere and buying. in exchange and making a lot of money doing that, right? So I want to say that it don't matter where you're investing. What matters is, how you navigate the waters, right? So if you're going out of state somewhere, don't just go buy somewhere cheap. Buy somewhere where they have job growth. Buy somewhere where there's in-migration. Buy somewhere in the city where there's the path of progress. We did a deal in Columbus, Ohio. A couple deals in Columbus, Ohio. By the way, I love Columbus. This is as a side note, I like the cold. That is a great city. Within that very city, we did 3 different deals, and there was one in particular. It was not in the path of progress. Very difficult to rent. Right now, we did that in a tough economy back in the Great Recession. We actually got far. We had a 58-unit building. We got it full, but we had to do stuff like get 2 months free. We had to do heavy concessions into the building, right? Whereas we had another property that was, still a hood, still a C-class area, but it was in the what they call this in the path of progress, right? About a mile or 2 from where we were, a major outdoor mall that was built recently. Jobs were over there, so we had no problems renting those apartments. Same city, right? Path of progress. You know what I mean? And obviously, new construction, you know where the new construction is happening. Now, new construction also can be a double-edged sword. What happens when there are a bunch of new apartments and stuff built, and rents can stagnate for a minute. Why? Because somebody can go down the street and own a brand new apartment just a little bit higher than what they can rent before. So what would they rather do? What would you rather do if you were a tenant? I go rent a brand new apartment, right? Which is good in a sense of balancing the market out, right? You know what I mean? That's why it's so interesting in California, in the Bay Area, because we have this big need for housing. And it's so difficult to develop anything because all the laws and rules and then just opposition from people in the neighborhoods, right? But the bottom line is when new construction is popping up, that is telling you about an area. And that area is probably the area you want to invest in, right? But just understand, if you're in like downtown Oakland a couple years ago, when all these brand new apartments hit and COVID hit, the rental market went down a little bit, and it's recovering, right? But there was a time because there was all these brand new apartments, and COVID happened, and it was, hey, it's great. There was some pain there for some landlords for a minute. It has rebounded, and all of those brand new buildings were there for a reason, because that's where the economic growth is. Crazy city we call Oakland, but that's what growth is at. Right. So understand that these 7 trends, how they interact with each other, right? Because anytime you see inflation, you can almost guarantee that interest rates are going to go up. So when people think, oh, inflation, prices going to go great, great, great. But the cost of doing business goes up as well. So you got to be wise in making it. All right. Now, here's your basic real estate market cycle, right? From a chart perspective. You know what I mean? And nobody got a crystal ball. What I mean by that is there's no one out there, Warren Buffett included, that can exactly time this perfectly, right? So if you can say, hey, I'm gonna buy at this point here and then sell at this point at the top, obviously you're gonna make that bunch of money. But it's very rare the case when you can absolutely time where this is and where this is. So then what do you do? You utilize some wisdom and a strategy. I'll talk about a couple of strategies you can put in motion to be able to make wise decisions. Now, I'm assuming everybody on here is interested in real estate, or should be on, right? So we're real estate people, yes? So we're in the business. Warren Buffett is an investor, the greatest investor of all time, arguably. So he is full-time in the business. But last year, I would categorize as the top of the market. And I would say more around September, October, I think, in my area, in my business, was the top of the market for commercial real estate apartment buildings. He and the stock market and everything last year was kind of the top of the market, right? Warren Buffett, believe it or not, was criticized last year because their company was sitting on so much cash. They were not going out there like everyone else and just buying stocks and buying companies. They was stacking their cash. However, It wasn't on the sidelines. Meaning that, and that what I mean by that is they weren't just sitting on the Bahamas with their feet up, like, oh, I'm gonna take some time off. Like, they were in the market. They just wasn't going and buying it. They stick to a formula, right? Now, this year, oh, they've been going on a buying spree, and they got a bunch of cash to be able to go ahead and do it. It's just good timing, right? They know exactly the exact precise point of top to bottom, no. But they can say, hey, look, we are at the top. I'm not overpaying for nothing. If I get the deal, I'm gonna buy it, right? And we're not at the bottom. I feel like in at least apartment buildings in Oakland, I feel like we're somewhere around here in this phase. Another thing is, I don't think that we're gonna go deep off a cliff like we did in '08. This is a different set of circumstances, right? Over the last few years, we've had to actually qualify for loans, right? In '06, if you had 800 credit scores, you can get whatever you want. Because all you had to do is write, I make $2 million a year, I make whatever it takes to get the loan. That was the environment that we were in. You could get no money down loans, 90% loan on apartment buildings. You ain't been able to do that over the last 5 years. People have been getting really good interest rates, right? Not as many adjustable rates, no pickup payment loans. I don't think we're going to jump off the cliff. You know what I mean? I do think that we're in the ship, and I don't think it's at the bottom. It's certainly, I believe, beyond the top. And if you got, throw something in the chat, you know what I mean, however you feel. We are going to leave about 5 to 10 minutes at the end of this for questions. But if you throw something in the chat and tell me how y'all feel about, kind of, just what's going on, where you think we are in the market. Now, you got to also understand, real estate is very hyper local. So what's happening in Oakland is different than what's happening in Stockton. It's different than what's happening in LA. It's totally different than what's happening in Houston, what's happening in Austin, and what's happening in Miami and New York, right? But we are all affected by those first 2 things that we talked about. We all experienced inflation. We all are experiencing increasing interest rates. And the flow of real estate is affecting us all. Flow of money in the real estate is affecting us all. The good thing for the real estate market right now, that another reason why I don't think it's going to drop off the market, drop off a cliff like it did in '08, is because we got a healthy flow of money into our real estate markets. In '08, it was no flow of money. I remember those days, all right? I didn't have a 9-to-5 job. I was selling deals to pay my bills and feed my family. So I remember those days very, very good, right? Remember what it took to get business. And there was no flow of money in the market for a while, right? So that's not the case now. You know what I'm saying? So that's why I want to let you know. But I do think that we're probably about here in this market cycle. We haven't bottled out, but we're past the cycle, right? So investors like Buffett have begun to buy, but he followed his strategy, right? And what I say to you is that now is the time to really get in, all in, but to be wise about it. Anything you do, you shouldn't just be throwing money against the wall. You shouldn't just be buying because your cousin bought something. You just buy it because somebody on the internet said buy it. I'm just gonna buy it. You have to follow a strategy, you have to follow a plan, and you have to be diligent about it. But it is important for you to understand where we are in the market cycle. I don't think you can time it perfectly, but you at least have to have an understanding of where we are. I cannot tell you how many people last year that I talked to, I talked to about a price on a building where I said, I think that's too much. And people would say, no. We got 3 to 5 more years of this. There's so much money in the economy. It's going to be out. I mean, multiple people, not 1 or 2. And I'm sitting here saying, well, to me, that didn't make sense. Because last year was so out of control. Multiple offers above asking price, all cash, type of thing. That in my mind, just I don't think this is sustainable, and I think you need to be wise. In fact, I did several video content pieces and webinars about that very thing, where I'm just saying, hey, look, we need to be wise about this. I'm not saying don't buy your property. I'm saying you need to think it through, right? And understand markets. It doesn't always go up, right? It's cyclical. So I'm going to keep drilling that in, but I really want you to understand that. And this is how you can understand how to make money. Give you an example. Would it have been better to buy an 8-unit building in 2009, or would it have been better to buy an 8-unit building in 2007? Know the answer to that, looking back, right? We don't have a crystal ball to look forward, but what we can do is look at these 7 trends and try to figure out where we are in our marketplace today. And then come up with a strategy, all right? Now, I'm gonna talk about the contrarian timing strategy, which is buy when there's blood on the streets. Basically, buy when it's all bad. You know, this is counter-cyclical, and it's kind of along the lines of what Warren Buffett is saying, is to be fearful when everyone's greedy. So at the top of the market, you need to be wary, or at least you need to be very cautious. And then you need to be greedy when others are, right? And we are in the beginning stages of the negative news, the beginning stages of people being in fear about what's going on, the beginning stages of a recession. You know, and essentially, this is where it takes some courage to go out and make some moves out, right? Because you're buying before the real estate market improves. And in fact, right now, you may be buying and the real estate market may go down a little, all right? Which, by the way, is not a horrible thing if you buy in based on a particular strategy where you can make cash flow today going in and you have a value-added strategy, right? I know a lot of investors. I know a guy got 23 buildings, all paid off. And he said when the Great Recession was happening, it didn't even, for him, it was like no big deal because he had 23 units paid off. So he had no concern about what the market value of those buildings, because they were fully rented, paying him every month, no mortgage. It don't matter if the price was up. Now, if he was trying to refinance, he's trying to do this, if he just got debt, it's unsustainable debt that you can't afford to pay. Like a lot of people got loans, they couldn't afford to pay it, and the value dropped, right? That's why you had so much mass, you know, foreclosures, right? But if you got property that's profitable, you can weather the storm. Now, we're talking, like, I believe that we're beyond the peak. So this year, this summer, I've done several deals where I felt like they were great deals, either for myself or for the buyers that were getting. For like and I also we represent some sellers in that same thing. I feel like the seller made a good deal considering where we were in the marketplace, and they're able to accomplish their goal of selling and exchange or selling and writing off in distance, right? That's important too. You don't want to try to, if you're a seller, you don't want to try to hang on, you know, and let the market go down. You know what I mean? But you got to have a strategy, a contrarian time, and say, hey, look, blood is on the streets, we're going to buy it. Now, here's the thing about that, the word of caution, is that a lot of contrarians will wait till the market bottoms out. The thing about it is we don't know if it bottoms out until after. You know what I mean? So Warren Buffett has started buying again this year. He's still following his formula, but there may be some even better deals coming next year, right? Doesn't mean the deals he bought this year, though, are not profitable or not making money. And he has like a buy and hold strategy as well. So if you buy and hold, it's all about the fundamental economics, the income that's being brought, right? So you can still buy and have things go down and make money if you're buying them with the proper strategy, right? The one word of caution is don't sit on the sidelines all the way waiting for it to bottom out if a great deal comes across you. And my thing is, the great deals rarely just don't come across your desk. You have to be hunting for them all the time. And you may not pounce on them. Like last year, we thought going back to Warren Buffett, I'm sure they didn't buy a lot of stuff, but I'm sure the people who look for deals for them was looking for deals. Because you have to always be, you're in the business, you're in the business. You know, you can't just say, hey, I'm gonna take a 6-month vacation. It don't work like that. You may not buy nothing in 6 months, but you want to hustle. Maybe you're balancing your portfolio. Maybe you're dealing with tenants. Maybe you're looking aggressively for deals that just ain't done. because rarely does that deal just show up. You could, but you have to be hunting it. And if you find a great deal, but you're like, hey, I think the market's going to go down a little bit more, don't miss out on the great deal because you trying to, steal the property. Get the double or the triple, get on base is what I'm saying, and make money. All right. Now the momentum strategy, a little bit different, because the momentum strategy is saying, hey, you're going to buy once it's clear that the market is starting to recover, and now the market's going up, we're not at the top. All right. So the momentum strategy is for people who are a little bit less risk averse. The aggressive entrepreneurs of the world is going to be more contrarians out there swinging the bat. That's going to be a lower amount of people, though. You know what I mean? And so the momentum strategy requires the market to stabilize, right? We're not there yet. You know what I mean? So let's say you decide that the momentum strategy is a better strategy for you and your business. That doesn't mean sitting on the sidelines, though. That means you need to get real familiar with the economics. You need to get real familiar with the market dynamics. You need to get real familiar with the city plan of wherever you're going to invest, where the deals are, who the brokers are, what's going on with financing. You need to really tool up and arm up yourself, get as much education as you can, be looking for deals. Because the one thing is, you have to look, the old adage in real estate investing is look at 100 deals to do one, right? But which means you got to look at 100 deals. That means 99 deals didn't work. It didn't make sense. It is in that process that you're developing yourself. So if you are saying to yourself, I'm going to do momentum strategy, I'm going to settle up a little bit, and then I'm going to go out there. Understandable. I get it. Just don't be stagnant. Don't say, hey, I'm not going to do any business. I'm not going to do any research. Right? You have to get in the game. You have to be active. Right? Now, one thing, I'm going to get into some more specific opportunities, but I'm going to talk about selling. Some of you guys may own properties right now thinking about selling. A very important basic in your selling is important to start the sale during an upward cycle and not get greedy trying to wait for highest prices at the top of the market. Saying that because as a broker now, we consistently are talking to people about selling. That's kind of what we do, right? I'm getting more people coming to me this year about selling property than last year. We probably all can agree last year was a better time to sell property than this year, right? All things considered. But we do heavy marketing and prospecting in our markets, talking to sellers or talking to property owners about selling. And what's weird is that when it's time to sell, most people want to hold on. And now when it's time to hold on, a lot of people are thinking this. All right. Now, that being the case, if you are selling and you need to sell, there are situations and circumstances like I'm dealing right now, fine. Selling a building, probably $100 grand, 50 to 100 grand less than I could have gotten last year. He owns a building free and clear. He's getting a 1% return on his equity, about $1 million. Getting about 1%, making about $10,000 a year. Not a good return. So we sell this building, right, in a down market relative from last year. And he goes, and let's say he goes and buys a single tenant triple net lease, which is like $1. Those are 5% cap rates. So he, in the down market, is going to sell his property 50 to 100 less than I could have done last year. But by rolling that money over to tax deferred exchange and buying a 5% cap rate, he's going to more than quadruple his income. More than quadruple his income. All right. So just saying all this to say, it's not the end of the world if you need to sell property at all. There's still market. Remember, I said there's still money flowing into the market. So you still got action, right? But it's not 2021 either. You know what I'm saying? You have to be realistic. You have to understand where you are. You have to be with the pricing current, and then look, if you look at it and saying, hey, look, I would like to sell, but I don't need to sell, maybe you hold. Maybe you hold. You know what I'm saying? But if you need to sell, price it right and do an exchange where you can make more. All right. I just wanted to say that before I get into the buying opportunities and some of the stuff that we're doing, some of the stuff you can do to make some money. All right. It ain't the end of the world if you have to sell. All right. And if you do have to sell, consider an exchange and look at what money you're making on the equity side. This client only making 1% of the on $1 million. Dang near do better in the bank then. We take that capital, exchange it, and he gets 5%. You understand what I mean? That's what I'm talking about. Okay. Now, let's talk about buying opportunity. This is what everybody I had to set the table up. You have to understand the fundamentals before we go in there and start talking about individual things we can do. Biggest thing right now, do not sit on the sidelines at all. It's time to make a plan and aggressively look for opportunities where you can solve problems and make them. This is what I mean by that. Investing is a plan, it's not a product. Investing is a plan, it's not a product. I learned that from my rookie yourself. Saki, that ain't mine. His book, Rich Dad's Guide to Investing, where he talks about the biggest part of investing that you need to do to be successful is to develop a plan, an investment plan. It's like in business. You guys are entrepreneurs. As entrepreneurs, business, we got to create a business plan of action. How we're going to run our business, how we're going to grow our business, right? What happens is a lot of investors, we don't put together these plans for our investments. You know, you have to put an investment plan together just like you would a business, right? So I have several videos, a couple videos on my YouTube station about how to make that up. Make your plan though. Just come up with a plan. It can be a one-page plan, but it needs to be a written out, thought out plan, not just shooting for the hip. Oh, I think this is a plan. Then you go out aggressively and look for opportunities where you can solve a problem. You are wanting to make money in this time, in this inflationary double-edged sword time. You got to find problems out there that you can solve. And when you solve them, it's a pot of gold at the end of the rain. Okay? Very, very important. So a couple ideas to think about in that space is repurposing properties for their highest and best use. And you find a building that is not like Toys R Us, right? A bunch of Toys R Us buildings went vacant. I think there was a big hedge fund or group out there buying Toys R Us buildings and converting them into Amazon fulfillment. So this big old warehouse space, it ain't gonna be retail. It's like warehouse space in retail. There ain't gonna be no retail stores like that again. But now a fulfillment center is in demand. So that is now a better use for that property, right? Now, finding properties that need to be updated, old building, right? You find, and maybe you can fix it up, and maybe you can raise it. You're in a rent control area. You have to be aware of rent control. Just keep that in mind. But most areas of the country don't have rent control. Even if you're living in a rent control area, you can go somewhere else and find an area that doesn't have rent control, and find a building that needs to be fixed up, and fix it up, and those rents up. Also, you can use creative financing to your advantage. Understand, one good thing about there is a few good things about high interest rates. As interest rates get higher, loans become more difficult to get because debt coverage ratio, right? Debt coverage ratio in commercial real estate is very similar to the debt to income ratio for residential real estate. Your debt relative to the income. So for commercial, it's relative to the income of the property, right? So higher rate squeezes that a little bit. So I am seeing now, not theorizing, I am seeing in the marketplace right now, more and more sellers who are willing to carry financing, who are willing to do lease option to buy, who are willing to do subject to financing. I'll talk about all this stuff. So you can use this to your advantage now, to make some money, right? So just a couple ideas with that. Now, the key is that fundamentals don't ever change. You need to stick to the cash flow model, right? And in fact, you need to master the cash flow model. And all the cash flow model is understanding how to analyze income and expenses, basic math, right? Your effective gross income, which is your income from the property minus any vacancies, plus any other income like vending, laundry, so forth, billboards, minus, that's your effective gross, minus your total operating expenses. That operating expenses are what it costs to run the building, the cost of doing business, not your mortgage, taxes, insurance, management, maintenance, PG&E, all of that. That gets you to your net operating income. The net operating income is the lifeblood of the business. That's how we value properties in commercial real estate, right? It's what you use to pay your mortgage in order for you to get cash flow, net cash flow, which is the primary reason we invest. A lot of people invest and want to see understandable, but it's growth in income and your net operating income that's going to drive that, growth and appreciation. Along with market conditions and cap rates and stuff like that. But cash flow is the key to driving and making moves, right? Very, very important. And a lot of people made a mistake last year, in my opinion, in buying properties that were negative cash at the top of the market. You don't want to buy negative cash flow at the top. Get away with negative cash flow at the bottom market, middle market, because the values are going. The values go down and when the values stagnate, that's when negative cash flow is really, really, really difficult, right? Now, when you're choosing properties, key indicators you look at. First of all, capitalization rates. That's the overall return on a building, right? The net operating income divided by the value or the price. So if you paid $1 million for a building and your NOI is 100 grand, you got a 10% cap rate. You get 10% on the money you paid for the building. If you paid $1 million for that building and it's generating $50,000 a year, you got a 5%, right? And, you need to understand that and understand the intricacies of cap rates and what's going on in the market and sub-market, right? You need to understand what cash on cash return is. That's the cash flow divided by your initial investment, right? Very, very important. That's really, I think, more important than the cap rate because that does include your mortgage payment, that calculation. And that's the money that actually goes to you, right? Here's another thing to think about. What is your return equity? Now, this requires you to already have some property. In this measurements, we're usually doing this analysis for people who are considering a 1031 exchange. And say, hey, look, I want to go out and buy some properties, move some properties. And we say, well, what's your return on equity? And most people say, what do you mean? And we look and see, well, how much equity you have in your property now? How much cash flow you're making? So we take the cash flow you're making divided by the net equity. That's how I was able to tell my client who's selling for less than today than he would last year and say, hey, you're still going to make money. You're going to quadruple your income because you're only making 1% on your equity. I can roll you and get you into 5%, something in 5%. And now you're doing this mortgage project. Quadruple, whatever you can say. It's a lot more money. Right? But you got to be able to understand where that is. Another couple key things: unit mix desirability. Does the property have 1, 2, 3 bedrooms? Now, 1 bedrooms get a bad rap, but depending on where you are, 1 bedrooms could actually rent for a higher price per square foot, and 1 bedrooms could actually rent quicker. In our area, we have a lot of micro rooms, popular studios, less than studios, and there's all these housing programs. So like 1 bedrooms and studios rent like that. You know what I mean? Doesn't mean 2 bedrooms and 3 bedrooms don't either, but you kind of got to know your area. Studios are not going to rent in the suburban area. They're just not. You have to be in like an urban rural area where there's a lot of jobs, a lot of transit. You know what I mean? So you need to figure that out for your area. But unit mix is very, very important. Obviously, the physical condition, but this is the biggest thing I think you need to look at. You're trying to make money in inflationary time. You need to find a property with upside. You need to find a property where you know you can add value to, right? Because you can't just simply wait on the marketplace to go, right? We're in inflation, we're in recession, we're all these things. You need to make sure that you can add some value to that building, which is going to bring you more rent and bring you a higher value down the line. Especially because you need to have more rent because your expenses are going to go up, right? So if you buy a property like in rent control, everything's under rent control, your rents ain't moving, and your water bill, your PG&E bill, maintenance, everything's up. Okay, that's why you need to make sure there's a very clear-cut value add petition. And that will help you, like I said, choose wisely, right? We're not just throwing mud against the wall trying to get into properties. We are making wise investment decisions to set ourselves up for everything. Now, all that being said, you got to aggressively go after it, right? You got to aggressively go after it, right? You have an understanding. We talked about market cycles. We talked about what's going on in capital, market flowing in real estate. We talked about interest rates being high. We reiterated the cash flow model, why that's very, very important, right? Now it's time to go after it. Now you might have said, hey, well, maybe I like the momentum strategy. Let things stabilize, and then I go out, so make something happen. Well, if that's what you're gonna do, you have to go aggressively, right? Meaning that you got to become a market expert. You have to be an expert on what's going on in capital markets. You have to know what's going on in that, in your specific area where the deals are. And you might be saying, look, I'm not ready right now. So I'm letting this thing settle out a little bit. But you have to be going after it so that when that opportunity does present itself, and when the market does improve, you are to that deal before Alibaba and the 40 Thieves get on. You know what I mean? It's competitive. When the market starts to improve, then that's when everybody's going to get back in the market. And it's going to be real hard to get an exceptional deal. And the exceptional deals are going to go to the people who are aggressive. All right, so that's what we're talking about. Now, a couple more little things to sprinkle in of how you can make some money right now and bring value. Look for properties, low interest loans that you can assume. I got a buddy of mine, David Pio. He's got a real nice listing in Oakland. And the headline of his listing when he posted it, and I don't know if it's sold yet or not, but I think it's going to sell quick, was, hey, this property has an assumable 3 point, I think it was like 3.2 or whatever it was, 3 point something interest rate. You can buy this property and assume this interest rate. Well, that becomes inherently more valuable than building down the street because rates for that same building is going to go out and get it. If you're lucky, high fours, most likely low to mid fives, and in some instances, high fives or low sixes on apartment buildings. So if you can get 3 point anything, you are cooking the grease. You're doing really well, right? And so that makes that particular building a little bit more valuable than the building down the street, right? And people in that situation, there may be somebody in that situation who all of a sudden they got laid off in their job, and now they got to do something. Or all of a sudden their business is not performing the way they need to, and they maybe need to free up some cash. They say, hey, look, man, I don't got time to be on this whole market, this whole thing. You come in and pay some cash, take over my loan. Or like the people, like the client that David Pio has, they're saying, hey, look, we want to sell. You can come in and assume our loan. So that now makes our property more attractive. And for you, the buyer, you're getting maybe a half of what someone else would pay. Man, that might be a little extreme, but a significant discount off the market interest rates. And therefore now you have created value. Again, we talk about how you create value. You have created value by purchasing that property. Just right there, right? Now, you also need to tap into your network. Figure out which associates are sitting on capital who might want to invest. You guys might need to come together and go buy some stuff, right? And most of these big commercial deals are syndicates or funds or groups that are going out and making it happen, right? So you need to start figuring out, can you align yourself with a syndicated group or fund under a like-minded group of individuals who have some dough who want to invest. Now, you also need to learn how to structure creative financing deals, such as master lease options, wraparound mortgages, subject to acquisitions, seller carryback, and land contracts. We're going to go into that on this one, but those are just a few strategies and tactics you can go out there and use to acquire properties today, where in a high interest rate environment, you got interest rates that are more difficult and make loans more difficult to obtain. You and the sellers notice you are going to have a little bit more leverage when you're talking to sellers about carry funds. And I'm working on 3 deals right now that involve seller funds on behalf of my son income. I'm just saying that to you, and you still have to find these deals, Most properties advertised on the MLS, advertised on LoopNet and CoStar, advertised in general are not going to be like, hey, seller financing. There are beginning to be more and more, but you kind of, again, got to go after it. Have to find these deals. I think the number one thing I want y'all to say, I want to impart to you. Do not get discouraged about what's going on in the news. Not to get discouraged about hey, we in a down market. Listen, take that information and say, all right, I'm going all in. You know, whatever this is, or whatever your strategy, that you get to pick that. You get to say what your strategy is. You get to say what timing you're going to do. Right? You get to say, hey, I'm going to sit in a year doing research and wait for the market, or I'm going to get in right now and do the research as well. You figure that out. But this ain't the time to sit on the sidelines and just say, I'm going to wait till they get better. You got to be active, and you have to be aggressively going after your dreams and goals, specifically in the real estate industry. All right. Now, another couple of things before we wrap up. A couple of specific things. I think there's a big opportunity in buying hotels, purchasing them at a discount, and changing them to house. I'm doing this in Stockton. We bought a single room occupancy hotel. We're going to be converting that to house. Right. That's something I've observed people buying regular branded hotels, turning them into apartments. In fact, a lot of people, as a broker, I get a lot of hotels emailed to me, and a lot of them will say reposition opportunity, meaning that, hey, look, it used to be a hotel, the highest and best use is no longer a hotel, it's a apartment. Same thing with office and retail. I know there was an article I read in LinkedIn about a company, I think in Texas, bought a large office building. They're making apartments. And as COVID has changed the work landscape, you know, I think this will be more and more a trend. Hotels, it's an easy thing to do. Office, that's a harder conversion, but might even be able to get a better deal on an office that just ain't got any prospects of tenants kind of leasing, right? Retail properties are being converted left. Whatever use makes the most sense. I talk about Twitter Us. There's a fund out there buying them and turning them into the Amazon fulfillment, right? Just looking for properties that need to be repurposed. That's what our group is doing. That's what a lot of my clients are doing as broker. I see that as a major opportunity for you to make some money out here. It's not easy. It may require you to be teamed up with a group of investors. It may require you to learn some new skills, but that's a huge opportunity in this inflationary time. And if you repurpose a property, let's say in a rent control area, you take an office building to make it housing, and that's not subject to rent control. You know, all things being considered. So, you know, now that's a hack of how you can come to a rent control area, provide value by bringing housing to a housing starved area, and then economically you're not restricted, so that you can keep up with inflation, beat inflation, and make some dough. All right. Now, I started in 09. So I got real good at finding and tracking down short sales, foreclosures, REOs, properties in bankruptcy, tax liens, you know, utility liens, all these types of elements of distress, driving for dollars, finding, boarding up buildings and calling the owners and making a deal. This is the time for that. This is the time for that. You need to learn how to hunt those. It's something that we teach our agents how to do on a weekly basis. We just had a role play session on Monday, and we're going all on what. This is how you call people who are in default. We track defaults, and they're up. I can say in my market, they're up about 20% over the last quarter. And it's to be expected. You know, in a shift, somebody's not gonna be able to make their payment. It's part of life. It ain't like it used to be. But here's the one thing on that a foreclosure deal, a distress deal is usually not gonna just show up on your doorstep. It's going to require you to go after it. And it's going to require you to do, like I say here, is to be a creative problem solver. Look for areas, problems that you can solve in the marketplace that will make you money. You know what I mean? And this is what I don't think there's anywhere in the area where they don't need housing. Housing is, we're underhoused in the United States. Not enough more people than there is buildings, right? So anything where you can, you know, bring housing to the table where it's economically feasible probably makes a lot of sense. But you also might be able to take an office building and, you know, and make it a, you know, a hospital, a medical office. You might be able to take a retail, make it into an office. You know, there's other, commercial uses that you can use other than housing. You got to figure that out. You have to be hyper local. We talked about the 7 trends. You got to know where the path of progress is. You got to know what's going on in your marketplace in order to be able to execute on those ideas. All right. Last thing before I leave y'all, we'll wrap and get any questions. I love apartment buildings. I think it's the best investment class. And I think, particularly here in rent control markets, where you buy apartment building at a discount, and especially something that has vacancies, right? In the rent control market, vacancies can be your friend because that means you can go and lease that vacant unit out for full market rate. Now, every rent control is different. Some rent control areas have vacancy control. We don't got that. Vacancy control is where you're not able to rent it for full market value. So that's very restricted. We don't have that here in Oakland. So you got a vacant unit, you can go get full market value. And what I would say, consider leasing out to Section 8. Section 8 has got a bad rap as a broker, as a landlord, as an investor. Over my 19 years in the business now, almost 20 years, be 20 years next year. I have more success than war stories with Section 810. And Section 810 is the one thing, is Section 8 is not subject to rent control either. There are restrictions in raising the rent. If the rents, you can bump them up so they can keep up with inflation. That's what you want to do in rental property, is keep up with inflation or beat inflation. That's why rental property and real estate can help you out if you can do that, right? And Section 8 will allow you to do that. And you get a check on the first or direct deposit on the first like clockwork. So when COVID came and there was a shutdown and you couldn't evict no one, property owners with Section 8 tenants had consistent money coming in. In fact, brokers, it becomes so popular around here, brokers market properties with a bunch of Section 8 tenants with federally guaranteed rents. That's what they call it, Section 8, right? So consider it. A lot of people don't consider it. I implore you to consider it. Way to make money, do some good. You got to screen them just like you would screen anyone else. That's why I think you got to consider. Now, side note for agents and brokers. Now, I love agents and brokers. That's my business. Real estate investors out there, you should be using top agents and brokers to help you find your deals, right? You don't have to be restricted to only working with them, but a lot of the agents and brokers have the off-market deals. Every property we bring to market, guess what? It was off-market. So just keep that in mind, investors. For you agents and brokers out there, you're discouraged. It's not 2021, but you can make some money. And you can actually make more. So a couple of things I advise. I think one, everybody needs to know how to work short sale. We're going to see more short sale. Right? I closed a short sale this year because the market was high, everybody was overbidding, and now we're not at that point anymore. We're stabilizing off that point. There's going to be short sales in residential. There's going to be short sales in commercial. In fact, the banks learned from the last market cycle that a short sale for them is way more efficient than an REO. Right? Obviously, also, I didn't put this on here, but if you can go get REO accounts, go get REO accounts. I just happen to think way more properties are as a short sale as opposed to an REO, because for the bank, they would rather do a short sale than an REO. Learning from the last month. So that's what I say. Understand. When short sales hit last 07, most of it, I didn't even know what a short sale was. Myself, I found out quick. But a lot of people, when I talk to people, right, I just ask people to know what a short sale is. Most people don't know what a short sale is. If you're a real estate agent or broker, you know what that is. And I suggest you get some experience working on it. Now, you may say, hey, I don't want to mess with that, but you at least, if you're looking for deals, you're looking for opportunities, you're looking to make money during this time, consider it. Work with short sales. Service your existing clients and look for unique ways to add value to small. Just don't bury your head in the sand or leave and go to corporate America, because we need you agents out there pounding the pavement, making it happen. And look, out of crisis, there's always opportunity. Always, 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 always. I like to keep it real, so I've tried to keep it real. I showed you where I thought the marketplace was. This whole presentation, I've been consistently saying, there's opportunity, there's opportunity, there's opportunity. Just here's my deal. Be a leader, don't be an opportunist. All right, be a leader in your marketplace, be a leader in your office, be a leader in your family, be a leader in your community. Find solutions, build solutions, make money. Just don't take advantage of it. It's my only That's my only thing, y'all. And that's the presentation. I hope it's been great. Now I want to open it up for some questions, some comments. I'm gonna let me go here and stop the share and see if we have any questions, any chats. I got one question here. All right, Tyrone Mills asks, does new construction of an ADU in an opportunity zone count towards the doubling of basis of the asset? It says, for example, duplex sells for 500K in OZ. I spent 150 in remodeling and construct a new ADU for 350. I see what you're saying. Yeah. So now I'm not the expert on this. I got some experience with opportunity zones, but what you're saying here, you bought the place for 500K. You spent 150 in remodeling, and then you spent 350 for a new ADU. So you spent 500. And actually, my understanding of this what Tyrone is asking is it has to do with opportunity zone. Another great way of investing in real estate. And the opportunity zone investment requires you to set up a fund or invest with the fund, right? So there's some legal maneuvering you can do. But once you do that, you have to follow some rules in order to be tax deferred completely. And one of those biggest rules is that you have to spend money improving the property. And essentially, my understanding of what that is you have to spend the amount of the improvement value. So every property on its tax base has a land to improvements allocation. That's how your CPA figures out your depreciation schedule, right? Figuring out your land to improvements allocation. So if you bought a building for $1 million and you close escrow, and your taxes going forward, they're going to say, hey, the land value we estimate is $200,000. The improvement value we estimate is $800,000. Right? They came up with that. That's what are that's your tax basis, and your depreciation schedule is based on your improvement because you can't depreciate land. That is true. They ain't making no more of it. So land don't depreciate, all things considered, at least from the tax standpoint. So you have to spend at least the improvement value on remodeling or constructing a new ADU or constructing a new building in order to qualify. So Tyrone, in your example, you would have spent more than the improvement value because you bought the building for 500K. So there, within that 500K, there's going to be an allocation for land value. Now, as you know, in California, our land is worth more, and in the Bay Area, worth more than a little bit of the Central Valley. That has to do. I mean, look, we're in the Bay Area. There's a big bay. So you can't build on the bay. There's a bunch of hills and stuff, and limited what you can build. So the land inherently, there's a whole bunch of people. It's a little bit more valuable. So your duplex for 500K, there's going to be a land allocation. I'm going to say probably 100,000, just venture a wild guess, which means your improvement value is 400. So all you got to do is spend 400 and you're Gucci. Good. You're in compliance. So Tyrone, I think what you're going to be all good by spending the 150 and then doing an ADU by 350. Now, that ADU, accessory dwelling unit, if you don't know what that means, also is, my understanding, not going to be subject to rent control. That's going to be like a new building, and you rent it for top market rents, and you can keep renting it, right? You don't have to, rent it 1 year and then be stuck there for the rest of your life. And I keep hammering on rent control. I'm not like, there's pros and cons. I have clients in Oakland. I have a client, one of my biggest clients. He said he loves rent control because, well, he knows how to maneuver. You know what I mean? He buys tenants out and does all that stuff. He got the pockets to do that. The small landlord ain't gonna be able to do that, so it's a pain for the small landlord, which is what most of us are. The bigger investors, the big corporations, they probably don't like it either, but they just have the capital and the know-how to how to maneuver it. And that's what we talk about. And Anna Oliver says great information. Thank you, Anna. Appreciate you. Another agent and investor out there, one of the best agents in the business. Anna Oliver, thank you for tapping in. Appreciate that. And I think the biggest thing that I'm saying to you all is that, look, we have to look for opportunity when there is turbulence in front of us, when there is a challenging time in front of us. And that's the whole thing of what I was saying. I'm sorry I went a few minutes over uh, in this presentation because I'm passionate about this, man. I started my company in '09. And look, by the way, here's another thing. My wife was pregnant, first child. So I went from having, I was renting at the time, I went from having one rent, one PG&E, one Comcast, opening up a brokerage, leasing out a space, to having two rent payments, two PG&Es, two Comcasts, and a whole bunch of other expenses. At the November '09, going into 2010, my daughter was born in February 2010. I remember she was born. And the following month, I'm walking to my office. I'm late on the rent. My hands are shaking, and I went to the bathroom. I go to the bathroom and take a deep breath and look at myself in the mirror and say, "You know what? Just maybe I'm gonna get through this." And because I knew the opportunity that was in front of me, you know what I'm saying? And I'm here to tell you and to communicate to you is that there may not be the biggest opportunity like it was in like in '09, but this might even be better because it's not like the world, it's not jumping off a cliff. It's like, hey, market's down a little bit, interest rates are up a lot, sellers are willing to carry financing, sellers are willing to negotiate, and the rents are up. I think it's just an amazing opportunity for you to go out there and make a whole bunch of it. I hope you do, and if you're looking to collaborate and connect with somebody to be able to help you do that, I'll let you board. As a broker, we work with investors. We get investors in the properties on a consistent basis. And we get investors in the properties, good properties. We spend a lot of time on due diligence, a lot of times finding properties. We just don't slam people in the deals, right? We put together groups to go out and buy property. And for agents, we are expanding our team, getting ready to open up the office in Stockton. We are expanding our team throughout the state of California. We do a lot of work virtually. And if you're looking to connect with a brokerage that does commercial real estate, that is not a corporate snobby organization or corporate stiff corporate situation, you want to come with us because we're flexible entrepreneurs. We are teaching agents how to invest in real estate. And the best way I think for agents to do is to go out there and serve investors, especially if you're just starting. A lot of people do this in wholesaling and you can make some money in wholesaling, but it's actually harder to wholesale a property than sell a property. And so if you're an agent or broker out there, connect with us and let's see how we can do business. And I think Martha Simmons, she says, is there an opportunity to join your brokerage or team? I'm really trying to learn. I'm not a broker or agent. Yes, there's an opportunity. So we hire agents, people who are not licensed. There's opportunities within our organization where you can come, you can learn the property, and we call them bird dogs, learn the business, and work on property deals. We call them bird dogs. People can come in, if they're not licensed, you can't do a lot of things licensed people can do, but for real estate investing, for business, the biggest thing is finding deals. You learn how to find deals, then you're going to make money. Because you can wholesale a deal, you can bird dog a deal when you're not licensed. And you need to learn how to find deals. And let me just tell you, it ain't easy. When you go on YouTube and Grant Cardone is telling you, you're going to make $1 million. Just buy my course, and you're going to go on there and hunker down and make you $1 million. All right. It ain't that easy. I'm keeping it real. But it's profitable. It's doable. You can do it. The marketplace needs you to do it. The family needs you to do it. All right. And what I'm trying to say is why don't we do this together? Why don't we link up? Why don't we figure out a way to connect, collaborate, and coordinate, and do it together? So if there's nothing else, and Martha, please reach out. We have your email. I think you have, maybe go on our YouTube stations or our website, infinityinvestments.net, and book an appointment where we can talk and let's do some business. It's been real. Oh, we have another question. Teresa Quadre raised the hand. Yes, Teresa. Do you have a question I think we're in webinar mode, so I don't think I can bring you up to speak. But if you have a question, Teresa, you can chat it in or put it in the question Q&A. All right, Teresa. Oh, okay. I'm going to say allowed to talk. I think I can bring you on. Teresa, you are allowed to talk.
You actually, thank you, Steve. This is Teresa Contrarian, and we have done with the Realtors, the Central Valley.
Okay.
We have, you have spoken for us. It was Money Mondays. However, I was just going to ask you to put your information so we can connect with you.
Absolutely. Okay, let me give you guys a couple. Thank you, Teresa. And so the best way to connect with me is to book an appointment on Calendly. Now you can do that one of a couple ways. Our website, infinityinvestments.net. You can easily do it there. You can also go to one of our many YouTube videos. Go on our YouTube station, Infinity Investments. Not investing as another company, Infinity Investing. We are Infinity Investments on YouTube, or Steve Peterson on YouTube. And on all of our videos, in the description, there is a link to book an appointment via Calendly. Now you can also call our office if you want to, and that number is 510-675-7755, and I'll go ahead and put it in the chat. And connect with us. Those are the best ways. The reason I say Calendly is because I'm throughout the course of the day, I'm either meeting with somebody or talking to somebody, or giving a presentation or going somewhere. And if I don't answer the phone, it could be me calling you back, you calling me back. You go to the website and you hit that Calendly, you're going to see my schedule, and you can match it up with your schedule, and you go and book that day, and then we'll be in there. But you can always call our office. I'm gonna put this in the chat right here. You have a great staff. Talk to someone and get you on the calendar to where we can sit down and talk, and we can Zoom and talk. Just, you know, I am crazy busy, but I'm looking forward to meeting you and talking to you. This time, this is for me. We are action packed right now. A lot of people want guidance. A lot of people need direction. A lot of people want to know what to do, how to do it, and we are at the forefront of that. You know what I mean? And I came up in the distress game, so you know, I think we'll see some more of that distress. I'm working on, I won't go into details, but I'm working on a deal right now, which is an REO. I did a short sale earlier this year, working on probably a couple of short sales. So that's a space that you want to get involved in. You want to make sure you book some time and we talk. So I hope this has been great. I got to get rolling. I got a 2:30. I literally would love to spend all day with you guys, but I got to get rolling. This will be, please share this. This was valuable to you. When this video come out, because it'll be on YouTube, if not today, tomorrow, for sure. We attempted to go live. I don't know. I didn't see any, chat from YouTube Live, so I don't know if that happened or not. We're gonna improve our YouTube skills, but it will be on YouTube. And so if this was valuable to you, please share this with someone else. Pass it forward, and let's educate ourselves. Let's stay focused. And let's go make some money in these inflation. You might have to pay $10 for a gallon of milk. You might have to pay $45 for a package of chicken. We don't control that. We only control how we play the cards that we do. And so I hope that today was enlightening to you to help you play your cards better and make profitable moves for you and your family. Thank y'all very much. Have a blessed day. And I'll see you at the next one.